So when it comes to car loans, I want to give you guys a real life example here, and this has to do with me. And that's because the very first car that I ever bought, I ended up with a 17% interest rate, and I financed it for 72 months, which is 6 years. And then on top of that, I also paid almost full retail for the entire car, and I bought all the extended warranties and all of that added stuff, which made the car a complete ripoff. And that's why I'm here today to tell you that car loans are only worth it if you follow a few specific things, and that's what we're going to be going over. Now, I am not opposed to getting car loans or paying cash for your cars, but what I am saying is if you are going to get a car loan, I want you to do it the right way so that you can end up spending as little money as possible on interest and different fees so that you end up better in the long run. So with that being said, we are going to be going over the 3 most important things that you can do to make sure that your car loan is worth it rather than something that's a complete ripoff. So the first thing that I want to mention when it comes to getting a car loan and making sure that it's worth it is just the fact that you have to be getting the best deal possible on the car. And I know this sounds simple, but this has to do with the financing. It also has to do with the price of the car, because at the end of the day, if you buy a bunch of extended warranties, you get a really bad interest rate, and you pay a lot for that car, all of that money is going into that loan. So if you paid $25,000 for the car, but you really could have paid $20,000, then that is a big deal, because that's $5,000 more that you're financing that you don't have to. Now, I am not going to elaborate much when it comes to buying a car, because there's a ton of different nuts and bolts involved when it comes to getting the best price possible. But if I were to give you one piece of advice, what I would say here is that you have to be doing your research on the car that you're buying, because I don't care if you're in love with the car, it doesn't matter. You have to look up the car on different sources online and find out exactly how much that car is worth so that you know if you're in a ballpark range that's a good price or a bad price. That way you at least have somewhere to start. So if you end up walking around the dealership and you find the perfect car that you want to buy, you test drive it, everything's perfect, then the one thing I'm always going to recommend here is that you compare it to what other people have paid for that exact same car. So you have to look up the make, the model, the miles, the different trim level, everything that's specific to that car so that you know apples to apples what other people are paying for that specific car, and then you have a good starting point of where to negotiate. Now, if you do want to know more about buying a new car or a used car or just negotiating a car deal, then I will leave a playlist at the end of this video that you guys can watch to help you further find out more information on those specific topics, because I've made a ton of different car buying videos and a lot of them should be able to help you. Now, the next thing that you have to pay attention to when it comes to your car loan being worth it or not is the actual interest rate that you get on the car loan. Because a lot of the times you might go into a dealer and you might get a rate of 12% for the car, but you really could have qualified for like a 6 or a 7% rate through your local credit union. So you really want to know ahead of time what type of a rate you're actually going to qualify for, and that is really important when it comes to buying your car. So what I would recommend you do before you go out and buy a car is to get pre-qualified from a local credit union, because they're always going to have the most competitive rates. So what you do by getting pre-qualified is you actually get pre-qualified for a set amount of money. So let's say that your budget really can only handle about an $18,000 car. Well, then what I would do is get pre-qualified for $20,000. That way you're on the high end and then you don't have to renegotiate anything. So if your car comes in right around $19,000-ish, then you're just fine and you're already pre-qualified at that predetermined rate. And if you do already have a car loan and you feel like your rate is probably a little bit too high, then it doesn't hurt to just go into your local credit union and find out if you can refinance your car. Because a lot of the time you'll find out if you've been making your payments on time and your credit's gone up, then you're probably going to end up with a better rate and a better term than what you originally signed up for. And that is always a good thing, because I just want you saving money here. And another thing I want to add here is that you need to pay attention to your credit score, because this is one of the biggest contributing factors to the rate that you're going to get as far as an interest rate goes on your car loan. So if you go through the dealer or through a credit union, they are going to be checking your credit, and you need to have optimal credit in order to get the best rates, because that's just the way it is. Now, if you're not sure what your credit score is, you can always just hop on Google and type in free credit report, and you'll find a lot of different reputable companies out there that can check the 3 different bureaus so you can actually see what your credit score is, and it will also tell you what's good and what's bad with your score so that you can start to work on it. Now, if you do run your credit report and your credit score is low because of something that you don't feel is accurate, then you can always report those problems to the bureau so that you can get them fixed. And then also you're going to find the obvious problems with your credit score as well. So for instance, if you did make some late payments and you're aware of that and it's true, then you're just going to have to give those time, and you're going to have to make sure that you make your payments on time every single month so that your score can start to go up again. And if you don't feel like you have enough time to fix your credit score before you need to buy a car, then what you can do is you can get a co-signer on the loan so that you can use their credit as the better credit so that you can get a better rate on your loan. But just be really careful here, because if you do end up making some late payments or anything like that, those dings are going to end up on both of your credit reports. So be very careful here and wise, because I don't want you doing anything foolish. So just make sure that you're getting the most competitive interest rate out there, and then obviously make sure that your credit score is in check, because that is going to be a big contributing factor to the rate that you're going to end up getting. Now, the next thing that makes a car loan worth it or not is the obvious truth of if you can afford the car or if you can't. Now, I have a really basic strategy here that you guys can follow along with. This is going to help you determine if you can afford a car or not, and it's just based on some simple mathematics. And please don't take this as the only advice out there, because when it comes to buying a car, you might have a lot of debt at home, and I don't know all of those numbers. So these are just very basic equations that most of us can put in. That way we can get a ballpark of what we can afford and obviously what we can't. So as far as car affordability goes, there's just 3 steps that you need to follow here. And the first step is the fact that you cannot have your loan go longer than 60 months. I would highly recommend that you do between 24 and 48 months, but if push comes to shove, 60 months is the longest that I want you going. Now, the second step here is that you need 20% down on your car. And I know that this is a lot of money, but as far as this equation goes, this means that you can afford the car, because I don't want you going upside down in it, which means that you owe more than it's worth. So 20% down is the next step. Now, the third step, this is the one that has to do with your own income. And this step is that you don't pay more than 10% of your take-home pay. So meaning the money that you're getting after taxes. So if you make $6,000 a month, then the car that you should be buying should have a $600 monthly payment, according to the other steps that you're also following. Now, keep in mind, this also should include maintenance and registration, different things like that. So really, if you're making $6,000 a month, you should probably have a $500 car payment and then $100-ish for the extra stuff that's involved in owning the car as well. So just make sure that you get the best deal on the car that you can, make sure that you get the best interest rate, and obviously pay attention to your credit score, and then make sure that you can actually afford the car, because like I've said in a lot of different videos, your payment isn't the only thing that matters here. The payment can be misconstrued because they can make the loan longer and make your payments smaller, and that's not what you want here. You want to get the best value for your car loan. Now, if you do want to watch some other car buying videos, I'll leave them right over here so that you guys can watch them. And if you just happen to find this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So feel free to subscribe if you guys are into this content. But thank you for watching, and have a great day.